2024 is the year where millionaires will be made. So on my channel, I've put money into hundreds of different investments. When I sold my business in 2020, I ended up with enough money where I could put some money into a lot of different things. But usually, you only have enough to go into one or two or maybe three different assets. So I get asked every single day, where should I put my money? What's the one thing that I should get into? Should it be real estate? Should it be stocks? Should it be crypto, DeFi? What? Where should I put my money? Where's the biggest bang for your buck? So when you're looking for the perfect investment or which investment's right for you, there's a graph that you should think about, okay? And the two factors that go into investments are the return that you're getting and the risk that you're taking. And in general, the higher the risk, the higher the return. So again, depending on your strategy, you could go super high risk, but super high return, or you could go somewhere in the middle, or you could go low risk, low return. So this is one graph you should keep in mind. Another way you could think of it is if you have return here and you have risk here. So then I kind of put the graph together that looks like this. And actually, I use ChatGPT to create this graph. If you don't use ChatGPT, you're a fool. But what I did on this graph was on the left, this axis is the potential return that you could get. And then the bottom axis is your risk percentage. So how safe, quote unquote, is your money? So when you look at something like DeFi, which is what a lot of my channel is, you have potential for 300% returns, but your money safety is, I put it 25%. So you have a 1 in 4 chance of losing money as well. So this high risk, high reward, that's an option. You can invest in these types of assets. Down here is high risk. So there's a lot of chance you're going to lose money, and there's low reward. So there's very little chance you're going to make money. In here, I put get rich quick schemes. Okay. Most of the Facebook ads for, hey, you can make $100,000 a month doing this. Most of these I would put down here. There's a very high risk. You're going to lose your money, and there's not very much reward. Then down here, this is where most people put most of their investments. It's low risk, low reward. So down here, I put a savings account. Your money is 99% safe, but you're only getting a 2% return. Stocks, your money is 80% safe, but you're only getting an 8% return. Real estate, put down here, your money's 70% safe, but you're getting a 15% return. So this here, this is the quadrant, the magic quadrant where you really should be looking. If any assets ever end up in this quadrant, the low risk, high reward quadrant, that's what you want to look at. And you notice there's one little X that I put up there in the low risk, high reward category, and that is Bitcoin. Not DeFi, not stocks, but Bitcoin. To me, Bitcoin has the biggest bang for its buck. And I'll talk about why. First, though, comment down below your price prediction for Bitcoin at the end of 2024. And whoever's closest, I'll send a Bitcoin miner to. So comment that down below. But to me, there's 4 reasons that I think Bitcoin is set to really take off here in 2024. The first is market cycles. So since Bitcoin's conception in 2011-ish, it's followed this cycle, and this will be the 4th time that we've seen this cycle. But there's a crash, and then an accumulation phase where people are gathering. Then there's a growth phase, and then a bubble. And then a crash, accumulation, growth, bubble. Crash, accumulation, growth, bubble. We've already had in 2022, end of 2021, 2022, we had the crash. Right now we're in an accumulation phase. And then logic would lead you to dictate. Logic would lead you to that next we're in store for a growth phase and a bubble phase. And if you'll notice, these cycles happen every 4 years. And that's the number 2 reason I think Bitcoin is set to take off here in 2024 is because of the Bitcoin halving. Summing up what the Bitcoin halving is to make the Bitcoin network run, miners get rewarded Bitcoin. So that's how new Bitcoin is put out into the markets. But every 4 years, the reward that is given to the miners is cut in half. So in 2012, the rewards cut in half, 2016, the rewards cut in half, 2020, rewards cut in half, and 2024, the rewards are cut in half. And this is programmed into the Bitcoin algorithm, and the purpose is to make Bitcoin more rare as time goes on. So this is the opposite of the US dollar. There's more dollars being produced over time. Bitcoin, in order to stop the inflation, there's actually fewer going to be produced over time until eventually there's going to be 21 million and no more Bitcoin put out into circulation. So in these growth and bubble phases have always happened traditionally with the Bitcoin halving. Because when there's fewer Bitcoin out there, it makes it more scarce, which makes the price go up. So again, no one knows the future 100%, but we've seen this cycle happen 3 times before, and it seems like 2024 is going to be the year that it happens again. The third reason I think Bitcoin could really take off here in 2024 is the ETFs. An ETF is essentially, it's putting Bitcoin on the stock market, essentially. This means that trillions of dollars are going to be flowing into Bitcoin. People's retirement accounts are going to start having at least some Bitcoin exposure in them. I was just looking at Acorns, which is a service. I just saw it a Mr. Beast, but they round up each purchase and then invest it for you. And I just saw they added a Bitcoin strategy. So again, you can do small company stock, short-term bond, and Bitcoin, which leads me to the fourth reason I think Bitcoin is going to take off this year is because it's reaching mass adoption. We're getting there. This is also why Bitcoin is less risky than it ever has been before. Again, there's always a risk-reward ratio. So back here, if you got into Bitcoin super early in this first cycle, Bitcoin crashes in 2011. Now down here during the accumulation phase, you're taking quite a bit of risk because back here, there's a chance that Bitcoin just goes out of existence. Again, it's only $1 for a Bitcoin back then. So if you put $1 million into Bitcoin, there's a chance it could just go to zero and go out of existence. Now, those who got in were rewarded with a 10,000% return. This second market cycle, Bitcoin's at about $100. So there's still risk. There's still risk it could go out of existence, but it's quite a bit less risk. So there's more adoption. So there's more money in Bitcoin. So less likely it's going to go out of existence. Still pretty risky though. But again, the people who got in early were rewarded with a 2,500% return. So less risk than getting in down here. But instead of 10,000% return, you only got a 2,500% return. The 2020 cycle, the odds of Bitcoin going out of existence at, a $10,000 Bitcoin, not very likely. The market cap is a few $100 billion. So it's not nearly as risky as getting in back here or getting in back here. But you see the people who got in were only rewarded with a 500% return. Only a 5x. But what happens is the longer that Bitcoin goes, the larger the market cap gets, the less risky it gets, but the less return that there is. So when we get to this market cycle, we might only get 200% returns, 300% returns. It's hard to tell with Bitcoin ETFs. And if we reach mass adoption, what that's going to do to the price, no one knows for sure. But this is the safest that Bitcoin has ever been in its history. So that's why it ends up here on my chart. And where if it was me, it's where I would focus and put most of my money. So your best bang for your buck, getting exposure to Bitcoin. And I think the two main ways that you do this is number one, through just dollar cost averaging. So that just means once a month, maybe you have $100 extra a month. Maybe once a month, you just buy $100 worth of Bitcoin. And this is pretty easy. You can use Coinbase, which I'll leave a link down below, but you just say buy $100, you connect your bank account. You can do a one-time order, or like I said, dollar cost average, you can just do recurring buy. Do monthly on the 24th, buy $100 worth of Bitcoin. Boom, there you go. You can also use Robinhood, or now you can even go on Fidelity. So if you have a Fidelity brokerage account, you can go on there and buy Bitcoin ETF on there. So that's the first way to get exposure to Bitcoin. The second way is through Bitcoin mining. I mentioned before, miners are who keep the Bitcoin network running. They have these computers that just are constantly validating transactions for the Bitcoin network. And they're rewarded with Bitcoin for doing that. So again, whenever there's a gold rush, I always say the pickaxe salesmen are the ones who really make a lot of money. So as a Bitcoin miner, you are basically the pickaxe salesman for this Bitcoin gold rush. But if you're a tech nerd, you love tech stuff, you can get yourself a Bitcoin miner and mess around with it, and you'll be rewarded with Bitcoin for that. But having a miner in your house is not for everyone. Okay, it gets hot, it's loud, there's a bunch of technical setup. So another way you can get exposure to Bitcoin mining is investing in a Bitcoin mining company. So there's several different companies that are doing this, that are offering NFTs for you to get exposure to mining, fraction mining, and I've done videos with all of these. I'll leave links down below. Ace Miners is another one. I just did an interview with Goofy Gophers Mining Club. Alpha Shares has a mining project that they're doing, and there's several others. But if you're newer to crypto and you'd like exposure to a crypto mining company, I'm actually an advisor for Quantum Expeditions. But they have 142 Bitcoin miners going right now. And what I really like about them is you can invest straight from your bank account. So you don't need to use crypto. You don't need to know anything about crypto. Using WeFunder, you can invest a minimum of $100 and you actually get equity in this Bitcoin mining company. So you'll have ownership in a Bitcoin mining company. So as they mine Bitcoin, they'll pay out those through dividends, just like a normal stock would do. And then since you have ownership in the company, as the price of Bitcoin goes up and the company becomes more valuable, eventually when they sell or when they go public, you'll receive a big payout. None of this is financial advice. You have to decide what you want to do, but my call to action is going to be get some exposure to Bitcoin, however you decide to do it. I'll leave a link to my full interview with the Quantum Expeditions team if you'd like to learn more about them. And like and subscribe to my channel as we go through a bull market here soon. I'll keep you updated on what investments I think are going to do well through the bull market. And if you're looking for ways to make passive income, or you're looking for side hustles, or you just want to put together a financial plan for your future, check out my Passive Income Engines community. We talk quite a bit about Bitcoin in there as well. So thank you so much for watching. Hope you have a great rest of your day.